The United States has declared the commencement of major combat operations against Iran, according to a statement made by President Donald Trump. The announcement confirms a significant escalation in military activity in the Middle East, with strikes reported to have been carried out by United States and Israeli forces on targets in central Tehran, including locations near Iran's presidential offices and near the compound of Supreme Leader Ali Khamenei. President Trump stated explicitly that American casualties are possible, describing the situation in terms consistent with active armed conflict. He further stated that the United States would annihilate Iran's navy and obliterate its missile industry, and called on the Iranian people to overthrow their government once the airstrikes conclude. Iran responded by launching ballistic missiles, targeting United States military bases across 5 separate countries simultaneously: Bahrain, Qatar, Abu Dhabi, Kuwait, and Saudi Arabia. Iran also launched retaliatory strikes on Israel. Israel has publicly stated its goal as bringing an end to the Ayatollah's regime entirely. The United Arab Emirates, Qatar, and Kuwait have shut down their airspace. A United States official confirmed that airstrikes will continue for days, not hours. Iran's foreign minister issued a public statement confirming that both President Pezeshkian and Supreme Leader Khamenei remain alive. Iran's government declared that there are no red lines remaining and that everything is now possible. Yemen's Houthi forces announced they are resuming attacks on Red Sea shipping. Several major oil companies have suspended shipments through the Strait of Hormuz. These geopolitical developments have triggered immediate and significant movements across precious metals and cryptocurrency markets, with physical gold trading at substantial premiums over paper prices in Asian markets, silver advancing sharply, and Bitcoin declining following the strikes. The developments span futures market mechanics, physical vault inventory movements, Eastern market premiums, and structural data points that were in place prior to the military escalation becoming publicly confirmed. Turning to the market reaction that unfolded while Western exchanges remained closed, price discovery continued through multiple channels overnight. PAX-G, a cryptocurrency token backed by physical gold, spiked to $5,600 per ounce, a gain of 6%, before pulling back to approximately $5,400, remaining well above Friday's closing price of $5,278. At its overnight peak, PAX-G came within $50 of its all-time high of $5,650 before retreating. China's spot gold dark market quoted a price of 1,226 yuan per gram, which converts to $5,560 per ounce. With Western spot gold sitting at $5,278, that represents a premium of $282 being paid for physical gold in Asia over Western paper prices. Portfolio allocation to gold currently stands at just 1 to 2% for most investors, a figure that is being noted in the context of physical gold trading nearly $300 above paper prices in the world's largest gold market. Thailand's Ha Sang Hung gold dealer halted trading completely, citing excessive price volatility as the reason for the suspension. The halt by a major Southeast Asian dealer is being noted as an indicator of the degree to which physical and paper pricing have diverged under current market conditions. In the silver market, prices are trading at $95.14 on Hyperion, with gold at $5,414 on the same platform. Shanghai spot silver stands at $105, with Shanghai futures at $108, against Western spot silver at $93. That gap represents a $12 premium between Eastern physical silver prices and Western paper prices, a premium that widened further during the actual escalation event, rather than compressing as some had anticipated. Bitcoin declined sharply following the strikes, dropping to $63,000. Over $100 million in leveraged long positions were liquidated within 15 minutes of the strikes being reported. The divergence between Bitcoin's decline and physical gold's advance to new all-time highs in Asian markets, at a $282 premium over Western paper, is specifically highlighted in the source material as a demonstration of differentiated safe haven behavior under acute geopolitical stress. These overnight price movements did not occur in isolation. They followed a sequence of market structure signals that had been building in silver specifically prior to the military escalation. COMEX registered silver added 2.3 million ounces, while eligible silver fell 2.6 million ounces, leaving total COMEX silver at 360.3 million ounces. Open interest on silver futures collapsed from 162,000 contracts 1 month ago to 118,000 contracts currently, a 27% decline occurring while prices climb from the $80s to $95. The March contract outperformed the May contract for 4 consecutive days. Silver lease rates rose for 6 consecutive days, reaching 1.6%. The silver swap rate moved to its most negative level since February 18th. These positioning signals were in place before the military escalation was publicly confirmed. Adding further context to the physical demand picture, one source reported that the largest recycling company in Shenzhen was offering $15 per ounce above spot for 999.9 fine silver. This figure is being cited as evidence of industrial and investment demand paying significant premiums specifically for delivery certainty rather than paper exposure. Shanghai physical silver buyers are currently paying $105 per ounce, while Western spot remains at $93, maintaining the $12 Eastern premium referenced earlier. The source material connects the current situation directly to data points that were observable in market structure prior to the military escalation becoming public. In the period leading up to the strikes, China had ordered its citizens to leave Tehran. President Trump had publicly stated dissatisfaction with the pace of Iran negotiations. The United States State Department had issued a statement indicating Iran had begun taking Americans hostage. $650 billion had been added to the precious metals market capitalization during that earlier period of tension. Oil, gold, and silver had been advancing simultaneously, a pattern the source material identifies as consistent with markets pricing geopolitical tail risk before events fully materialize into confirmed outcomes. On the broader precious metals structural picture, the source material references the following conditions as existing prior to the escalation. 10 consecutive monthly green closes on silver, gold's 7th consecutive monthly record close, a persistent Shanghai premium on silver at $12 that has now widened further, ongoing industrial demand, mine supply described as unable to keep pace with demand, continued central bank buying, ETF holdings at their highest level since mid-February, lease rates rising for 6 consecutive days, Chinese recyclers paying $105 for physical silver, and Thailand dealers halting operations entirely. The source material presents a set of risk factors and counter-arguments for consideration alongside the bullish structural data. Western futures markets had not yet opened at the time of reporting, with a 30 to 40-hour window before COMEX resumes trading. Futures markets are identified as capable of gapping and then filling on open. The military situation could de-escalate. Iran may choose not to escalate beyond the 5-country barrage already executed. The Strait of Hormuz could remain functionally open. Physical premiums could compress if paper markets move sharply lower when Monday trading begins. Coordinated bank selling during geopolitical events is identified as a documented historical occurrence. Gold and silver have historically pulled back following initial spikes once acute crisis conditions pass. However, the source material also identifies the following conditions as distinguishing the current situation from prior single-day geopolitical events. United States officials have confirmed strikes will continue for days and potentially weeks, rather than hours. President Trump stated that casualties are expected. Iran has declared there are no remaining red lines and that everything is now possible. Iran executed simultaneous strikes on bases across 5 countries. Iran launched retaliatory strikes on Israel. Israel has stated ending the Ayatollah's regime as an explicit objective. President Trump called publicly for the Iranian government to be overthrown. Houthi forces have announced resumption of Red Sea attacks. Oil companies have suspended Hormuz shipments. The source material characterizes this as sustained military operations, with explicit regime change objectives stated by both sides, rather than a contained, single-session headline event. The source material identifies 4 demand accelerators for precious metals, described as having activated simultaneously in the current environment. Geopolitical chaos driving safe haven demand, dollar weaponization driving diversification, supply disruptions driving industrial demand, and central bank buying driving monetary hedge demand. Regarding what to monitor in the hours ahead, the source material identifies the following as key data points to watch. The duration and intensity of ongoing strikes, whether Iran responds beyond the initial 5-country barrage, whether Hormuz closures expand or stabilize, the size of the Monday gap when COMEX futures open, whether COMEX registered silver continues draining or eligible metal is added, and whether the Shanghai premium on silver widens past $12 or the gold premium widens past $300 or compresses. Bringing together the full scope of developments covered in this report, the United States has declared the commencement of major combat operations against Iran, with President Trump stating explicitly that American casualties are anticipated and that the objective includes annihilating Iran's navy and obliterating its missile industry. United States and Israeli forces carried out airstrikes on central Tehran, with targets reported near Iran's presidential offices and near the compound of Supreme Leader Ali Khamenei. Iran responded with ballistic missiles directed at United States military bases across 5 countries simultaneously: Bahrain, Qatar, Abu Dhabi, Kuwait, and Saudi Arabia, and launched additional retaliatory strikes on Israel. Israel has stated its objective as ending the Ayatollah's regime entirely. President Trump called publicly for the Iranian government to be overthrown once airstrikes conclude. A United States official confirmed operations will continue for days, not hours, with the possibility of weeks also cited. Iran declared no red lines remain and that everything is now possible. Yemen's Houthi forces announced resumption of Red Sea shipping attacks. Several major oil companies suspended shipments through the Strait of Hormuz. The United Arab Emirates, Qatar, and Kuwait shut down their airspace. Iran's foreign minister publicly confirmed both President Pezeshkian and Supreme Leader Khamenei remain alive. On the market side, PAX-G spiked to $5,600 per ounce overnight before pulling back to approximately $5,400, remaining above Friday's close of $5,278 and coming within $50 of its all-time high of $5,650. China's spot gold dark market quoted $5,560 per ounce, representing a $282 premium over Western spot gold at $5,278. Thailand's Ha Sang Hung dealer halted gold trading entirely, citing excessive price volatility. Silver traded at $95.14 on Hyperion, with Shanghai spot at $105 and Shanghai futures at $108 against Western spot at $93, maintaining a $12 Eastern premium that widened during the escalation rather than compressing. Bitcoin declined to $63,000 following the strikes, with over $100 million in leveraged long positions liquidated within 15 minutes. In the silver market specifically, the structural data that preceded the escalation included a 27% collapse in open interest from 162,000 contracts to 118,000 contracts over the past month, occurring while prices climbed from the $80s to $95. The March contract outperformed May for 4 consecutive days. Lease rates rose for 6 consecutive days to 1.6%. The silver swap rate reached its most negative level since February 18th. COMEX registered silver added 2.3 million ounces, while eligible fell 2.6 million, leaving total COMEX silver at 360.3 million ounces. The largest recycling company in Shenzhen was reported offering $15 per ounce above spot for 999.9 fine silver. These signals were in place prior to the military escalation becoming publicly confirmed. The broader precious metals structural backdrop identified in the source material includes 10 consecutive monthly green closes on silver, gold's 7th consecutive monthly record close, a persistent and now widening Shanghai premium, ongoing central bank buying, ETF holdings at their highest level since mid-February, mine supply described as unable to keep pace with demand, and Thai dealers halting operations due to pricing volatility. The source material identifies 4 specific data channels through which price discovery continued while Western exchanges remained closed: PAX-G trading on cryptocurrency rails, China's spot market, Hyperion platform pricing, and Shanghai futures. When COMEX futures reopen, the source material identifies the gap size on open and whether those levels are sustained as the primary data points to monitor, alongside strike duration and intensity, Iranian response activity, Hormuz operational status, COMEX registered silver inventory direction, and Shanghai premium movement relative to current levels on both gold and silver. All figures, events, and data points referenced throughout this report are drawn directly from the source material and are recommended for independent verification through primary sources including CME delivery and open interest reports, Shanghai exchange data, Iran strike news sources, and PAX-G price data. That concludes this broadcast report on the commencement of United States military operations against Iran and the associated developments across global precious metals and financial markets.